Okay guys, following the colossal drop on cable yesterday, I thought I'd just add something into the foundation for you to look at. Now, yesterday I showed you how to map out a chart with fibs on the Nikkei. Well, this one I'm going to use an extension to see which levels are potentially going to hold after this colossal drop. Okay, so let's have a quick look. So just flip this over. Okay, so I've got my levels in. You know how I draw my levels, and one thing and another. Now, the rule of thumb is a strong directional move will retrace on itself. It will, but you need to figure out when that's finished. Okay, and you also need to figure out where it started and one thing and another. With this one, you can see that first part of the move started up here. All right, then it consolidated, kind of got to there as a low point, tried to come up, it couldn't, and then it sold off. All right, so is this level significant? Well, let's have a look back in time. So if I go out to the daily, you can see it is significant. It's been here before. It had a colossal drop, and this level was respected very well, and then it's bought its way back up. All right. When was the last time it was there? Well, going back here into this, the last time it was touching that level was 2 years ago. So quite a while. So this is a significant level. If it breaks that, it could have a proper breakdown. But let's see. So to take it back to the hour, because the hour is a good sample of data. Now we can see it started on the top of there, and it got to the low point here. Right. What I'm looking at is the bodies, guys. All right, in this instance. So let's have a quick look. How do we know what to do? So just get an extension. So you can see it's started there, and we got down onto the base of those bodies, and we're going to pull that back up to there and slide it across. Well, look at that. That 161 extension perfectly marries up with that strong level. This 127 perfectly marries up with this strong level. Then the 50% in the middle pretty much marries up with that. So 1, 2, 3 key levels. It's very interesting. Now, if we put on a normal retracement to see what's going on with this, so that'll be down from there to here. We then start painting other pictures. You can see this 23 here is going to be a key reaction point. Why? Because that's where it clustered before, and it's marrying up lovely to it. 1, 2, 3 candles on that 38.2 line. You know, there, and that one tried. And then on the 50, look, that's a key point as well. So everything's kind of marrying up, and it's marrying up quite well. So the question is, what do you do with it? Well, what you now know is you have key levels that you can work to. We know if this breaks, it'll try and get to this level. If it holds, it'll come back to the 23. If the 23 breaks, it'll come to the 38. The 38 breaks, it'll try and push through this to the 50, finally back onto here. That will be the game plan if you are mapping out this as a chart. All right. But it's Friday, it's non-farm payroll. Anything could happen today. But at least you know going into next week, if you're forward planning this, that the levels that have been drawn in are correct, and they're going to be solid reaction points. Okay, so this one here is kind of key at the moment. It'd be interesting to see how well that sort of holds and what the price prediction is. But a strong directional move normally 80% of the time will retrace on itself. So even that there is a strong directional move. If this level holds, you've still got a good opportunity to get this into the middle of here. If it retraces to the top, to the 23, we've then just mapped out where this can go. All right. Hope that helps. It's just something for you to think about and be interested in your thoughts. Catch you soon, guys.